Wall Street and Washington came together, and the result was a stock market rally. Profit reports were mostly upbeat, European markets rose, and there seems to be movement on some of the Trump administration's pro-growth agenda. So here are the closing numbers. The Dow Jones Industrial Average rose 174 points to 20,578. The Nasdaq added 53, and the S&P 500 gained 17. Bob Pisani has more on what drove stocks higher.
Why the rally today? You know, it's a tricky call, but several factors are fueling the move higher. First, earnings have been mostly positive today, whether it was CSX helping the railroads, or Qualcomm helping the semiconductors, or Dover helping the big industrial names. The earnings story has generally been better than expected, at least it has today. Secondly, Europe had a very strong close. It's been very choppy this week. French elections have been a major concern for the markets. That's going to be happening on the weekend. But those worries seem to have eased today on some hopes that more moderate candidates might prevail in the first round of elections over there. Third, after a lot of hand-wringing in Washington, there's been talk about a House compromise on health care. That would be a major move forward. And there's been more positive tax cut talk. Stock picked up steam as Treasury Secretary Steve Mnuchin said, we're pretty close to bringing forward major tax reform. And lastly, we've had a bit of a bounce back. Sectors that sold off this month reversed today very nicely, particularly, for example, retail stocks and steel stocks. The president talked up steel all throughout the morning. So here's the bottom line. There's not been a lot of movement in the markets because there's not really been a lot of reasons to sell. And we're only 1.5% from the historic highs. It's hard to make a case for a big drop in the markets unless you believe one of several things. First, France might be pulling out of the European Union. Or secondly, the tax cut program President Trump has been pushing will be dead. Or third, the U.S. economic data is just going to keep getting worse into the second and third quarters, and the bond yields are going to keep moving down. For the moment, the markets seem to be saying that none of these prospects are very likely. For Nightly Business Report, I'm Bob Pisani at the New York Stock Exchange.